Good evening, everybody, and welcome back to live market analysis for another week. It's a pleasure to be with you as we delve into markets and try and make heads and tails of the current macroeconomic and then drilling down to the microeconomic stock-specific level. The disclaimer before we get started says that everything we're going to discuss today is general in nature. That means it has not taken into account your personal financial objectives, situation or needs. So it's important that you take all reasonable steps to fully understand the possible outcomes of the information and the trading strategies we're going to discuss this evening. And if there's anything that you're concerned about, it's always a good idea to seek financial advice as to its appropriateness for you. Other than that, it's important to remember that trading and investing is risky. Markets go up, markets go down. They might not go the way you want them to. Ultimately, it's you and not I who's responsible for everything you choose to do. It's your money after all. The agenda for this evening is very simple, as it always is. Type in your request. I'll give you my best technical analysis reader. It could be anything from stocks, commodities, bonds, crypto, you name it. If I get a chart on it, I'll do some analysis, or it could be trading related. So anything to do with the methodology, the money management, and the mindset. Let us head over to the AMI broker screen. We're going to kick off as we usually do with our portfolio management model, and then a bit of a whip around the grounds, taking a top-down approach. So looking at the bigger picture before we drill down to stock specifics. And the portfolio management model works on the basis a little bit like when we're getting into trades. I like to use a 1/3 model for all the capital I have. So for example, let's say I had $12,000, and I'll pick 12 because I know it's divisible by 3. So if we've got a full risk model, we're going to literally, all of that $12,000 is available for us to invest. If we see something we don't like in the benchmark index, and for us it's the Nasdaq composite index, hey, in the very, very recent past, look, it's been that way as long as you've known me. In the very, very recent past, we've been intertwining a little bit of the Russell and also the ASX 200. It makes sense because certainly the latter is more appropriate for our local portfolio stocks, but using this to determine how much overall portfolio risk to have. So let's say we want to take a third off the table, we'd only be allowed to invest $9,000 of that capital. $4,000 would have to remain in cash. As much as a bargain we think we're getting, we still have to be disciplined and maintain that approach. If we went to 1/3 risk level, then 2/3 of our money, that is 8 of the 12s in cash, we're only allowed to play with 4,000. I don't believe that you're ever going to be completely out of the market, because I think even in a pretty crappy trend, we always are able, let's face it, you've known me for long enough to know that I'm always able to find the best trends within the crappiest market, that is to go long and short. So I still think there'll be stuff we can trade, and that's the model. So trying to prevent us from harming ourselves really is what it's all about. When the index is trending well, we're going to get better trades. When the index isn't trending well, we're not going to get as good trades. And I think we're at a 2/3 risk model here. I can't see any reason why we'd be more. I don't think that we're warranted just yet. I think if we started to push through this high here, it's just there's too much congestion on the screen for me to draw it in. So read it off here, 18,018, let's say. Close above that, and then I think we can move back. Very important language there, move back. We're not going to get, let's use it the same analogy before, 8,000 going to 12,000. We're not going to put that $4,000 in straight away, are we? We're going to continue to be disciplined, find the best trades each day, and add risk and move towards that full risk position on a close above 18,018. At the moment, we're plus 2/3. Where would we start to maybe back off a bit and move back to a 1/3? I'd be a little bit concerned if we close beneath that low there is 17,439. If it was a really bad candle, and I'm not here to tell you, then start to make that movement. If it's just kind of tickling it, not being really decisive with the candles, then probably just hold off a little bit later until you get a decisive move. I think we're looking pretty good, but this candle here is disturbing. In a good, risk-on, bullish way of thinking sort of market. It really shouldn't appear. But hey, there was not like there was a huge commitment on that day with the volume. It's just a bit of downside volatility that tends to pop in every now and then. But as we can see, when they do occur, they can have a significant impact on the market, especially if it has been preceded by a period of relatively little downside volatility. So we're watching this one, and it actually makes, I think, the close above that level even more emphatic and even more important for us. Let's have a quick look at the Russell. Therefore, okay, this looks pretty good actually. I think this looks better than the Nasdaq, and that's important because this is a broader market than. Well, actually, that's not fair to say. The Nasdaq Composite has actually got more stocks in it, but this is broader in the sense that we are looking at smaller stocks than the Nasdaq. Nasdaq is dominated by. It's got a lot of small stocks in it, but it's dominated. In terms of its capitalisation by the big ones. The Russell 2000 is a far more flatter market capitalisation structure. It's still a market capitalisation based index, but it's got a much flatter structure. If you take, say, the top 10 Nasdaq stocks, you've got probably off the top of my head here, but I know I'm pretty close, 80%, 90% of the market cap of the Nasdaq Composite. If you took the top 10 stocks in the Russell, order of magnitude, you're probably about 10%. I actually have done this study. It's in one of my articles on Market Index, but I can't remember who it is. If you could be bothered, go and find it. It's there. But that's order of magnitude. So to see this one doing better than Nasdaq, I think is important because it's a broad representation of US stocks. So that's a good sign, and it confirms everything I said before. I'm not too fussed or too worried about where things are right now. And that's despite all of the worry mongers out there and all the worrying stuff they're going to tell you. Close your ears and go la 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 la, or very politely just say, look, I'm just going to go in the corner and play Tetris because I'm not interested in your worry monger sort of stuff. Hey, eventually you might be right because in the fullness of time, everybody's right at some stage, aren't they? But until then, supply and demand is voting, and supply and demand looks pretty good. Let's have a look at the Aussie market to bring that sort of third piece of the puzzle into our portfolio management model. And there's nothing here that is going to push me off this idea that we've 2/3 invested as a minimum. But I think looking at this, if you Aussie stocks, more Aussie stocks oriented, I can't see any reason why you can't be a full risk position here. Today's candle is wonderful. Great lower shadow there. Very shallow pullback after this rally, and this was an extremely emphatic rally. You've heard me say so many times, and this is probably the most important thing I'm going to say to you today, V-shaped rallies are meaningful. Anything that's not a V-shaped rally isn't meaningful, and we have seen a V-shaped rally here, so that's very important. Shallowness of the pullback after the V is equally important, and then the white candles and the lower shadows since then. That one, and that one, all looking very good for us to have another crack at 81.49, and I can't see anything in the chart that suggests that we can't actually take it out this time. So they're the three sort of major portfolio management drivers for us. Let's see if there's anything else that could push us off that notion. We're just looking for red flags, canaries in the mine shaft here, so we'll have a whip around the grounds. Starting with Europe, I don't think there's anything that's worrying me too much there on the CAC. The DAX is fine. That's even better than fine, so that's certainly not worrying me at all. The FTSE is fine, not worrying me. And not that Spain, I think what's happening in Spain will worry me that much, but for what it's worth, it's not. The Hang Seng is not worrying me at all, is it? It's not a great looking chart, but it doesn't have to be great looking because it's been lousy forever. It just has to not be absolutely melting down. It's not, and in fact, the Nikkei is starting to go back up. So this whole carry trade mini unwind, is it a mini unwind? I don't know what we'll call it in history. Just flippin' annoying is I think what we'll call it, because there's some really nice charts that got absolutely torn asunder, or torn something anyway, and a few of you probably nodding your heads behind your computer screens there, because that was annoying. But for the most part, I think most of the trends that we're in have seemed to have come back pretty well, and many of them have gone past or surpassed their highs from there. So that is heading back up, and let's have to assume until the next event or reaction to the next part of the carry trade unwind, we're okay. That's the most important of these other market charts we're looking at. Nifty 50 in India continues to look very oh gosh, this one continues to look bloody awful, but it's not surprising us, is it? And it's not pushing us off our positions. Is it melting down? It's not melting down, is it? It's death by 1,000 cuts. So I guess in that sense we're okay. But out of the stuff we have seen, this is the most disturbing couple of charts we've seen here. Is of course what's happening in China. It seems to have been happening forever. So if the market, if we're just about to make new highs on the ASX 200, and this is happening in China, it's not a problem yet. Okay, not a problem yet. It is impacting the market. It's just not impacting the market at the top line, and part of the reason is consumer discretionary stocks have been very, very strong. Yes, there's a little bit of a pullback there, but overall this is what is pushing our market towards those highs. And in comparison, the stuff that is impacted by China in the medium and long term, That's the energy sector. You can see the difference there. Our banks aren't impacted. For now, they don't care. What a wonderful run they've had. And hopefully you're still holding your banking stocks and doing very, very well on them. And hopefully you haven't listened to any of the big brokers who have told you to sell them and you've only listened to the charts. Gold has been doing well, had a pretty awful day today, but otherwise not too bad. Healthcare's fine. Information technology has been doing extremely well, led by the likes of REA, CAR. In fact, they're in the XTJ, aren't they? But certainly Xero, WiseTech, Technology One, very, very good. And here's the other place that the Chinese charts are impacting, obviously, on the materials and the resources side of things. Properties looking very, very good. When we get to my scan list or my short list today, we'll see there's actually a property ETF that's come up today in my short list. Staples doing well, so that's your supermarkets, obviously Coles, Woolworths looking pretty good. There's your telecommunications, I spoke about some of those before. Utilities not awful, but not great, and that's kind of telling you the lay of the land for the Aussie market. I think that's probably, let's do base metals while we're here. We're going to have to turn our line chart on because we're looking at a PM, as in the afternoon fix on the London Metals Exchange. And obviously copper was going very, very well, then it wasn't. It's had a decent bounce, I'd say. If you're using Fibonacci numbers, then probably more than 50%, maybe getting close to the 61.3 Fibonacci retracement. If you're not familiar with Fibonacci numbers, certainly Google them. So it's Fibonacci. And he discovered the ratio between corn chips and tomato salsa. And it's a very, very important ratio for the markets. The copper chart also coming back. Well, that's aluminium, isn't it? If I said that was copper, I'm mistaken. It wasn't. That was aluminium. This is copper here. Not as good as aluminium. I think that's the point I was trying to make subconsciously. But Dr. Copper, yeah, well, that's part of the Chinese story, but actually not looking too bad, trying to turn that downtrend around. We'll look at the idle chart in a second. These are LME charts we're focusing on. Nickel's actually not awful. It's kind of turned around. Lead's not awful. Tin's not awful. And zinc's not awful. So there's some stuff that's not awful there. That's very interesting. Lithium is awful. That's still awful, definitely. All the lithium charts are very much awful. Let us head over to the Amy Broker. We've been an Amy Broker. We're heading over to the TradingView screen. Okay. And hopefully you've got my watch list going so you can look at these exact same macro factors every day like I like to do. The first thing I do is tune into here and go up my lists and go down my lists and see what's happening at a bigger level. What I've been working on with Claire, who's been helping me out with some testing and some screenshots, is these extra watch lists, which I will release soon, okay? And there's a chart watch daily scan, ASIC scans uptrends. Hope you can see that over here. There should be a downtrend. I don't know where it's gone, but it'll come back. And then don't worry about those too much. Those things feed into these things. And the whole point of this is basically I'll be able to share with you this list each day. And what I'll do is I'll upload, when I do my daily scan. So let's go to Market Index. The good people at Market Index who ultimately, pay some of my bills. These chart watch scans I put up there every day, which I'm sure you use, but I'm quite frustrated by the fact you have to get ChatGPT probably to turn this table into a watch list that you can then use in a trading view. So what I'm going to do is do that for you. Only people in my webinar crew will get access to this. Everybody else will not. And basically, I'll be able to share with you the link, and then you'll just go in every morning and they'll be updated for you straight away, and you'll just tick down the list, and that's where you can access. So somebody, Sudesh, has given me a thumbs up. I'm surprised nobody else has given me a thumbs up, so I think that's pretty neat that I'm able to do that for you. There you're going to get a few more now. So save you some time and some effort there in building those. I'm not going to do the shortlisted shortlist. It's still going to be the big table because I want you to see all those charts. I want you to see all those charts for a reason. If it's on that list, I believe they're plus 1/3, and I still want you to have a go at narrowing them down. So what you can do, webinar crew can do, not everybody else, is not look at the market index site. Well, you don't have to, I guess. But what I want you to do is take that bigger list, and I want you to shortlist that list. I want you to get a list of stocks and then go to the market index site and see which ones I shortlisted. And your goal is to get as close to my shortlist as possible, because I guess that's why we're here, aren't we? I mean, I'm trying to have a big head, but you're here listening to me because you're trying to get your skills to where my skills are, for better or for worse, right? Whether my skills are worth attaining, that's your choice. But the goal would be to get your shortlist to my shortlist. And if you've done that, you don't need me anymore. You're effectively doing everything I'm doing, and then off you go into the world. All right, I've achieved my goal. That's the public service announcement for today. What we were doing the whip around the grounds. I don't need to spend any time looking at Bitcoin because I'd rather not. Just between you and me, I don't look at it anymore. I'd stick my head in the sand and I pretend it's not there. Silver was looking good for a while. Unfortunately, it's pulled back. It's trying to bounce off the long-term uptrend ribbon. I think it's okay. Let's go that far. I still think gold's okay. It's flip-flopping around, but ultimately the trends, I think, are still very much intact. We saw copper before. We said it was trying to rally. It didn't look awful. This one is swinging back to looking awful, unfortunately. This is a high-grade contract. Iron ore had a big down day today. I'd be wary and weary, both, at getting too bearish on iron ore at the start of September, because November, December, late October, but definitely November, December, seasonally very, very strong times of the year. In fact, last year's low came in August. The last year's low was made in August. It's almost a carbon copy of this year. And if we go back the year before, it doesn't happen every year, but we know that the Chinese steel mills take in more iron ore in November, December. That's a fact. They have to do it. It's about seasons over there. It's about Chinese Lunar New Year. And you can see the low in November the year before that. So don't get too, I guess, bearish on this. I know the trends are always our friend, of course, but that one, just be aware there are some seasonality factors going. I think uranium is still cactus. Nothing's changed on that front. And the good news is you don't own any uranium stocks anymore because you sold them ages ago because you're a trend follower. And if you're a trend follower, you've got no interest in energy stocks, I guess, because energy commodities are not looking that inspiring. I thought that was going to go up. Thermal coal, it didn't do it. Unfortunately, the long-term trend was too strong. Not that it can't, it's just not doing it right now. And then coking coal obviously going the way of iron ore. Let's head over to the bonds and finish here. Of course, this is the most important part, is the price of money. I haven't actually looked at these for a little while. Very busy with earnings season stuff over the last few weeks, so we'll get a chance to take a deep breath and see what else has been going on in the world. Not a lot actually happening there. I think we're all pretty safe and secure in the understanding that the Fed will cut rates at its next meeting in a couple of weeks, probably by 25 basis points at the start. And then maybe we could get another 25 at least, but could be 50 by the end of the year. As long as none of these charts I'm going to show you here are going wildly in one direction or the other, I think we're okay. I think we're sans red flags. That one's creeping back up, but doesn't seem to be hurting the market at this point in time because it was this huge dip that caused the market to go down. So I think some righting of the keel here is probably not so bad. In fact, a little bit of extra positive carry there on Aussie yields is probably going to help us. And that's pretty much it. I think we've seen all the important ones there. Maybe we can look at some of the US banking indices, but I don't think they're an issue anymore because they are actually making new 1-2 year highs, or just about. So I think we're pretty cool. That's the whip around the grounds. Let's head over to your offline requests. Before I do that, I'll check your, make sure there's no housekeeping issues. That's the word I'm looking for over here. I do have a question from Nigel. Hi Carl, newbie question here. What are the parameters you use for the stock screener? I have a few which work okay, just curious what you use. Well, obviously my trend ribbons, Nigel, which if you've sent me, if you're new, maybe you haven't sent me your TradingView username. For everybody else, send me your TradingView username and I'll upload you to get access to my ribbons. So that's how I will ultimately reduce the risk of stocks to look at from everything down to stocks that aren't in a long-term downtrend and aren't in a short-term uptrend. You might want to add some conditions like preferably they are in a short-term uptrend. You might want to go so far as to say they are in a long-term uptrend, but keeping in mind you're going to narrow down like the pool more, but you also might miss some stuff that are just turning the corner. That's your turnaround trades. I like to see it all. Other than that, I might have something very simple like last candle needs to close in the top 1/3 of the overall candles range. So I've got a nice white candle at the end, because ultimately that's the final flourish. I mean, trends are great, but I want to see a nice candle to get me in. And then you could add other things like, well, I want to see more white candles in the last 10 candles than black candles. If you're clever, you can program things like peaks and troughs. Ultimately, they are the basic tenets of the model. And then the screener, which stock screener do I use? Well, the software I use is Amy Broker, but ultimately the stock screener is me, because once Amy Broker's reduced the list, it's a very broad list, using those basic things I spoke to you about. It's my job then to pick the better ones. And how do I do that? Well, that's what I'm teaching you every Monday, is how to do that. So I'm not sure if I can make it any clearer or boil it down for you any more than that, because there is a bit of work that's involved. We're going to do stock requests, and don't think we have any other. Your daily watch lists are so helpful, Carl. Thanks so much. There's Hoozle. It is an absolute pleasure, and they are all the public service announcements. Okay, let's do the offline requests, and we're going to head over to San. San's given me a few from last week. Apologies, I couldn't be with you last week. I did have as I said, a prior family commitment that I needed to attend to. It's been attended to, and we're back on the line. San wants STP, which has been going very well. Up until the last few days, I guess. It's been appearing in my scan list. Last time we looked at it in here, I think we said if it closed above that level there, we'd add a third. I think we had a full risk position up to that point from here and possibly over here. You might have added there. I would have added some there. I probably would have been annoyed that I did after a while, but it seems to have held the short-term uptrend ribbon. It's kind of going up in a very spiteful way. It's going up with a lot of supply. Look at the shadows here. So yes, there's certainly an excess of demand, but I wouldn't say there's this clear-cut consensus. What does a clear-cut consensus look like? That's a clear-cut consensus there. That's about as clear as you can get. Or some of these other ones, HMC, maybe a little bit wobbly, but no, I still think that's still very strong. I'm trying to pick up the top of my, I can just go to any of the banks. I know we had the carry trade, a dip there. But far more white candles, far fewer upper shadows. JB Hi-Fi, just trying to, well, there you go. That's probably a pretty good one to use as a case study. So just get those pictures in your mind, and then let's go back to STP, and we're seeing some differences straight away in terms of how far it goes when it goes compared to how far it pulls back when it pulls back. Obviously, the greater the consensus, and what is the consensus we're talking about here? We're talking about people thinking this is an awesome stock, people thinking that this is a stock they want to own, people thinking that this is offering them better reward, risk-adjusted reward than the alternatives out there. And the alternatives are everything from stamps to stocks and everything in between. So it's in that, if you kind of think of the market in those terms, it should actually be really hard to attract capital, and it should be. And you should be really good as a company to do that. And if you're not attracting capital like JB Hi-Fi CBA, then you have to ask or query whether it's the best one for your portfolio. Having said that, there's still lots to like. I'm just trying to help you, get from that big list to the short list, isn't it? That's ultimately the goal. So I think there's lots of good things to like on here, but I'm also a little bit concerned about, some of these shadows in the candles over the last couple of days. In conclusion, where would I be? Ultimately, I still think this is an FRP. It's starting to slip a little bit for me, and I'm certainly concerned. We can see the couple of shadow lows through here. We can see the short-term trend ribbon is also important. Okay, so I'm just trying to make that a perfectly horizontal line. I'll give you some numbers in a second. So if that low is say 168.75, I think you can kind of take 0.5% minimum off that. If you want go a full percent, you might want to start looking at things like average true range over the last 14 or 21 periods, two very commonly used durations there. All we're trying to do is put a little bit of space between us and that point of demand, because points of demand can be a little bit spongy, and we can find that stops do get run from time to time, and that pushes it a little bit below the point of demand, and then the demand comes in, soaking up that supply that comes out from the stops and going back up again. So you want to give it a little room. Order of magnitude here, we might go say a 1675 or a 167, I think is pretty reasonable. What does that look like here? Let's take that off. Let's make that one, and that's kind of there. And we can see that it's tickling that level, it's testing that level. That day's a tickle, that day's a test. Beneath here, I cannot put my hand on my heart and say that I would hold a full risk position at this stage. So I would have to go minus 1/3 on a close below that level. Would I go more than that? Is there enough evidence in here to suggest that another third should come out and be used somewhere else rather than waiting in this one. And that is a personal preference. Like I said, this is a common sense system, not a black box system. I'm leaning, and I'm just telling you the way I would do it, I'm thinking that if we closed beneath that level there, because it's the short-term trend ribbon, because these candles blended together aren't that great, and because of the shadows, let me bump that up to 2/3 off, and you might then just be holding on. If you like this company for whatever reason, that maybe that's you. I don't care obviously what it is, but if you had the feeling you wanted to hold on to 1/3 for whatever reason, that's kind of what it would be. Sorry, holding on for the long-term uptrend is the only reason why you're holding on, and you might then have other levels, little points of demand that you might be looking to exit that third in advance of that. But that's, I think, where you are on STP. Not the worst chart we're going to see today by any stretch of the imagination, but certainly there are some issues that need to be dealt with there. Let us go to Sand's next one, which is CHL, which I'm not sure what we're going to do with this one. I can see, not that as Sand has said, this stock has good potential, is now a good time to buy. Unless you're telling me about its potential in terms of demand and supply, Sand, I'm sorry, I'm really not interested in its potential. You are barking up the wrong tree, mate, okay? I'd love you to explain the potential in this company to me while I go over in the corner and play Tetris on my phone. As far as its potential in a demand supply sense, in a sense of this is attracting capital from the universe of capital because it is offering investors a higher risk-adjusted return than other stocks, I'm struggling to see it right now. It does have, now this is where we're going to bring it back to being educational for the stuff we do. The closest thing this could be to us was is it closer to an aggressive long entry or is it closer to a short trade? It's wavering somewhere in between those. It does have the hallmarks of a base pattern. A base pattern simply means going sideways for a prolonged period of time. We'd like to see, and it's hard here because this volume is skewing it, so if I zoom that out, I'm going to get a bit more scale on my volume here. I do want to see big volume pulses in my aggressive long setups, okay? So telling me I've got big price action moves, V-shaped rallies, if you've got big shadows, big white candles, there's another one there. That one didn't happen on volume, so that's not as good, but certainly that's starting to be interesting. That's starting to be a little bit interesting. It's not quite doing it for me, so it's not showing enough here in terms of the reason why we want that price action at volume is the last dregs of supply getting out, and the high volume means lots of them got out, but also that high volume means if the price action is good, then the demand is coming in to soak up, because stuff isn't bad forever, okay? And at some stage, companies do turn around. It happens all the time. So we do like to buy turnaround plays, but only when the demand is starting to swing back. Obviously, I'd like to see a short-term uptrend. It's not ticking that box. I'd like to see high peaks and high troughs for my aggressive setups. It's not ticking that box. I'd like to see the short-term uptrend ribbon acting as dynamic demand instead of dynamic supply, which is all we're seeing right now. So it's missing too much stuff to be a long trade. Is it a short trade? So I know Sam hasn't asked for that, but I think it's probably closer to a short trade than it is to a long trade, given the broader trends. Is it a good time to buy? Hey, you can do whatever you want with your money, Sam, but I wouldn't buy this one. Let's go to PNV. This one has been in here a few times, and I've drawn lots of stuff on here. So let me try and jog my memory. Look at this big black candle. I think, so I always do this, don't I? I think I said if you see that big black candle up here, it's going to have problems. I think that's what I said, but the only way we'll know is to go check the tapes. It didn't, there it did. At the end, there you go. It kind of did. Not kind of, I think it did. That's the big black candle there. So given up to that point, obviously we've got this impulse up here that we know about. I'm kind of, I want to know, well, you don't have to tell me because it takes too long to do like a survey, but what do you reckon, about that? I mean, that kind of looks like a species-ending event to me, doesn't it? Not only have we obviously drawn stuff in the past like minus one third, and I think in the past maybe we were only holding out 1/3 because of the long-term uptrend. But that for me is looking like it's time to go, isn't it? That candle there. When it's growing nicely in a new market, look, I don't dispute that. I think the trend was better than average up to that point. But I think this is a real problem, and especially given that it's coming in beneath that major point of supply. Because don't forget, we don't know that's going to be a major point of supply until we see what happens there. And I put to you, you almost can't get a more emphatic supply side response or the manifestation of supply in terms of that candle. So to undo the damage, that creates a damage of value X, right? To undo X worth of damage, we need to see at least X worth of good stuff coming back in. And I just don't think we've seen that yet. This is a good candle, and it's happening in a good spot too, isn't it? We know that the long-term uptrend ribbon tends to offer, again, we don't know until we get there and we see the manifestation of supply and demand at that point, but we know it tends to offer dynamic demand, so it's doing that. But I don't think on a balance of evidence and a balance of bad stuff X versus good stuff Y, that Y yet is greater than X. What could make Y greater than X? Well, obviously, we want to see, sort of price heading back up, making higher peaks, higher troughs. Another nice big shadow pointing down to confirm a trough would be good. Another nice big white candle heading back up through there, and then we could start to contemplate it. But there's so much damage done up here that it's for me, it's in the too hard basket. So a couple of things I'll say on this, Sam. I think when you see this, but I'm not around, I can't look at the charts for you every day, of course, but take some responsibility and say, well, okay, well, this is as good a showing of supply as you can possibly get. And that obviously rules it out for a buy at this stage. And then I know the things that Carl likes to see before he does want to buy something, which is higher peaks and high troughs and nice candles, low shadows, undoing the amount of damage that has been done. We're not seeing that yet. So I don't think we'd have any risk on this. So I think we're zero risk position at this stage. Let me write it on the current candle. So when we come back in the future and it's trading at $3, and you never know. I come back and say, oh, okay, well, clearly my analysis, not that my analysis was wrong, but certainly the demand supply factors weren't giving us great indications at that point in time. I think we are a zero risk position here. Going on to Sands' final one, which is red. Now, I don't know if you've noticed, but what a great case study this is of something that how my scan lists work up to this point here. It just always does that. I just want to get to say, even there's fine. But up to here, it was going in the list almost every day. Do you remember? It was a feature chart several times. My system loves stuff that look like that. And then you probably noticed that for a few days, it didn't appear. And then a few more days it didn't appear, and then that's it. I just didn't see it in Carl's list ever again, sort of thing. That's what the list of stuff I'd add 1/3 to. It's not a signal service telling you to get in, get out, but you know how to get out, so that's a good thing. But the other part of this great case study is that, I don't know if you noticed, it started to appear, or probably around there, as coming up in the downtrends list now, because it is changing trend. You can see we've gone, obviously, from those wonderful predominantly white candles, higher peaks and higher troughs, light green trend ribbon, offering dynamic support, all the stuff that ticks my boxes for a long, they stopped happening. We started to get more black candles. We started to not bounce off that light green ribbon. We started to spend too much time in it and start to close beneath it, and actually it started to change colour. And then it stopped going from offering dynamic demand to starting to offer dynamic supply. It went from being a trampoline-like zone to a zone that is, what's the opposite of a trampoline? Upside down trampoline, I don't know. But it's holding things down. And we break through key points of demand. And those points of demand start to act themselves as points of supply with lower peaks and lower troughs. And then we do all of that, copy and paste that, we start to do it at the long-term trend ribbon, which has been so reliable in the past at offering dynamic demand. And then we break through it, and then it starts offering dynamic supply. Ladies and gentlemen, this is a textbook case study in how my model works. And right now, saying this is in my downtrends list, which means two things, probably, well, one of two things can mean both. I wouldn't own it. That's the first thing. Number two, I'd be thinking about shorting this thing. They are your four, San. Hopefully you got something out of that analysis. Please continue to ask the questions. I don't mean to sound mean, and certainly not condescending. That is not my goal in answering these questions. But I know you're new, and ultimately I've got a certain way of doing things. That's why people are here, and I'm not going to change the way I do things because I'm consistent. But keep asking the questions because that's how we learn. Let's go to Craig. Craig's got SUL, and we're going to go and see some very nice looking candles here. FRP was the last thing we said on this one, and that was way back, probably on that candle there because it looked so good. Would have been happy to add risk on this day. Not happy to add risk here. I would have been really tossing up on that day. Look, I think it's fine, but that shadow still has not been dealt with. That's too much of a shadow. That's a black candle. That's not inspiring. That's not inspiring. I think that's actually pretty close to adding plus worth 1/3. In fact, I probably ran it as a feature on that day. And I think today's candle doesn't warrant it, just given the upper shadow there. But it's still very much an FRP. So we'll go here. But I just don't think I'm going to put the plus 1/3 on it. Okay, so holding what we've got. There's nothing worrying on here at all. So don't get me wrong, just because I'm not adding a risk to it doesn't mean I think it's bad. It just means I don't think we need to have any more risk on it than we have at this point in time. And we have to go to the next part, isn't it? You need to have a plan for what you do when things go wrong. And we wouldn't want to see it close beneath there. We know this is a point of demand. And if it closes beneath there, particularly with an emphatic candle, something that would resemble this, and it will resemble it even more in a second when I change its colour to black, that would be really disturbing. And that would be similar to that one we saw earlier on Polynovo, P&V. We're always worried about those sorts of candles. As a trader, they're the ones that you lose sleep over at night. You shouldn't lose sleep over losing money because if you're doing what you're doing it well over many, many trades, you'll be fine. I promise you that. But these are the things that we're worried about. It's I don't want to see that sort of candle because you know what it means, right? It means that the fun is over here and it closed beneath there. With that sort of a candle, I think I'd be all out. But certainly minus 2/3 on that candle. If it's just it comes down at a trickle of candles, only 1/3 would be appropriate. And there's variations, but I think common sense should prevail. And that's I think you would need to do there. And then your final 1/3 might come on a close beneath the short-term uptrend ribbon. But otherwise, hunky-dory from here for you, Craig. Peter B has Droneshield. I'm so glad you put this one in, Peter B. So we were, make no mistake, there's this zooming issue because go check the tapes. We were not FRP on that candle. We were FRP on that candle, which is that one there, and we really should have been. There's no reason that you wouldn't have been actually adding on that candle because it's not at $3 yet. Now, we can't tell the future, obviously, and the next candle was that one. And I did go on Twitter. We obviously didn't cover it on the day, or we didn't cover it since, really, and nobody's asked me about this until today, which is awesome, which actually makes me feel really good because I said to you on Twitter, I literally said, hey, webinar crew, species ending event, you know what to do. That wasn't terrible advice. And I've been watching it. It got my attention. It was starting to get my attention sort of around here. And in fact, it got my attention here. I think that candle's really nice. I think you'd be very brave if you went aggressive there. Obviously testing a little bit of dynamic supply through here. And that candle there is important. So it's saying, you know what, that short-term ribbon isn't really dynamic supply anymore. And then we get that little one, and today's the one. Today's the day. So if we go to store 2 here, this is my shortlist for tomorrow, and you will see Droneshield in my shortlist for tomorrow. So this is not only is it on the list, which means it's a plus 1/3, but this is one of my high conviction ones. Now, what does that mean? Does that mean it's going up tomorrow? I don't know. I don't know the future. It just means, in my experience, out of the short list, this is the short list that I feel has the highest probability of following or persisting in the prevailing trend. So that should answer your question, Peter. Today's the day. Oh, today's the candle. This is the candle that I think Droneshield warrants adding a third. It's more of a turnaround play. It's a little bit more aggressive because obviously we talked about how much damage has been done. There's been a significant amount of damage done here, but that's a long, long way away from where we are, okay? And it does have a pretty good pedigree prior to this. So I could see a little bit of FOMO creeping back in, people who gave up here. Could you imagine? There's none of us, of course, but you know the feeling, right? Where you, where, I don't know, you got it, you didn't, not going to buy it, knew I should have bought it, why didn't I buy it? I can't believe I didn't buy it. Oh, I'm so glad I didn't buy it. Thank God I didn't buy it. Should I buy it? No. Okay, I'll buy it on the next pullback. That hasn't pulled back enough. No, just a little bit more and I'll buy it. Oh, shit, why didn't I buy it yesterday? Well, I can't buy it now because it's gone up too much. No, forget it. That's it. I can't ever trade Droneshield again. This is stupid. What the hell? People have lost their freaking mind. No, I've got to buy it. Oh, that's it. I don't care. Even if I make the top, I'm going to buy it. Oh, shit, I told you so. It's always me. I should have got on TikTok and done a TikTok that I got in. That would have saved everybody a lot of trouble. All right, look, this thing's going to bounce. It's still good. The fundamentals are still sound. People still need to shoot down drones. Bloody hell, I've done it. Look, this is going to go down forever. Look, stuff it. I'm just going to hang on now. No, I can't take it anymore. I'm going to get out. Oh, shit. Oh, no. So there's probably a bit of FOMO out there, right? There's a bit of psychological damage accumulated in the market, and that could do wonders, I think, for people scrambling to get back in and undo stupid mistakes. A few people laughing there. How does Carl know exactly how I think? Okay, because that was Carl for many, many years. Many, many years ago. Don't do it anymore. That's why I'm here to teach you not to do this stuff. Okay, what were we talking about? We're talking about Droneshield. I'm plus 1/3. Let me type it on there. Plus 1/3 turnaround play. Full risk position if you've got it. Let's go to Peter's second one, which I don't think we're going to have as much success on, which is CTT, which, again, one of the most wonderful downtrends since it changed. And what I love about this model is it's just copy and paste, isn't it? Because why should Red 5? Red 5 is a gold mining company. Now, Cettire is they do luxury goods. Why should Cettire's chart and Red 5's chart move in such a similar way? Why? But they do. Why? Because it's just risk-adjusted return, isn't it? It's just, do I want to own this? Do I not want to own this? And there you go. Anyway, fast forward Red 5, hopefully not for Red 5 shareholders, but could be. Today was a big day up. So obviously, look, if you've been following my downtrends list, you might be short this thing. And I think this is actually a really neat case study. We don't talk about this enough. Is, okay, well, how do we, let's pretend we're short. So we're all short this, and we've actually been doing pretty well, and we get this candle like today. So much like we said with Polynovo, with SUL, we said, okay, that big black candle, that's the one that keeps us awake at night. Okay, for shorts, this is the candle that keeps us awake at night. It's that big white candle and a little bit of a gap and run there and some volume as well. And that's disturbing. So that is enough to push me out of my short, I reckon. I'd certainly go 2/3. We've also closed above the short-term downtrend ribbon. The only thing kind of not making me go the whole exit here is just we haven't really closed above that. So I'm going to go brackets exit short plus 2/3 because I don't want you to get confused with buying 2/3. Oh, but Carl, exiting a short is buying, isn't it? Why can't I buy? Well, because we have rules for our aggressive setup. We can buy stuff similar to this if we can make our aggressive setup work. Now, the good thing is this actually does have a base pattern. So that's tick that first box. We've actually got some serious volume coming out on previous lows, but I would argue we don't have great price action here. It's not a V-shaped rally. We're not seeing big downward pointing shadows and big white candles. So that's not really the hallmarks of accumulation there. That's just dead cat bounce. This is a hallmark of accumulation. So today's the first instance of something good happening at $1 at lower levels. So it might be the case that, say, in a few weeks or a few months, we might build this up to an aggressive setup, but I just don't know at this stage. There's not enough there yet. Again, aggressive setup. So I at least want to see the short-term trend turning around. I prefer to be above the short-term trend ribbon and having that short-term trend ribbon acting as dynamic demand. And yeah, there's a few things I want to see, but that's because we want to be sure that this giant bleeding great big downtrend has turned around. So for P to B, I'm not sure why you're asking me about this one unless you're short, and if that's the case, full respect to you. Exit plus 2/3. That last third will go to close above that medium-term peak there, and not an aggressive buy entry yet. Funnily enough, the two Peters somehow must be getting together and emailing. They email me. The emails come in one after the other. This different Peter. Peter M has got EGL. And this one's fine. Last time we looked at it, a full risk position. I might have said something along the lines of, look, it's a great trend. It's a bit sketchy. That's probably because there's a lot of paper out there. What does that mean? A lot of paper means there's a lot of shares on issue. And when there's a lot of shares on issue, you get these overhangs at certain particular levels, and sometimes they're hard to chew through. Even if the stock is good, it takes a while for demand to get through it. That's kind of what we're seeing here. I think this is fine. I think the trends look fantastic. It's doing everything that it should be doing. Price action, candles, trends. So I'm an FRP. I don't know. I'm pretty sure this went in my shortlist today, but I don't think it went in the shortlist of shortlist. But FRP, would I go plus 1/3 on that last candle? It's not a terrible candle. Like if this was something that you knew about, it was close to your heart, you love the story. I don't know why that would be you, but hey, maybe that's you. Then I don't mind it. If you could see a path to adding a third to this over all the other stuff that we might want to add a third to today. We haven't done my shortlist yet. So happy holder on that one for you, Peter M. BIO, which is Biome Australia, doing very well. Got caught up in a little bit of a pullback there. Was that the carry? I don't think that was a carry trade related, but probably didn't help. Not too bad. We have seen this before today, where we have this major point of supply over here that is influencing. It's just sort of creating this overhang in the market, both psychologically and in terms of supply. And it's very important we are attentive to the price action when we get near that level to see if that supply is being reinforced. So we're seeing upper shadows, black candles appearing near, pointing into that supply zone. That is the manifestation of that reinforcement of supply. If we don't see that, if we see white candles, lower shadows, that supply's gone. It's not there. It's not a problem. We're seeing a bit of that. It's not fully fledged, or it's not overly concerning just yet, but it's concerning enough for me to not want to add any more risk to this. I think you can hold what you've got, but continue to monitor this very carefully. I'll give you a level. If it closes beneath that, it's probably a case of there's too much supply. The market has realised that. They've realised we're not, like, if the market realises it's not going to get 75 or 80, why is the market still hanging on? They are going to want to do something better with their money, okay? And where does that realisation start to occur? If we close beneath there, we're starting to lose some hope. If we close beneath here, we're losing more hope, aren't we? And it's cumulative in terms of how the market is feeling, and then therefore how the market is responding. And I think certainly minus 1/3 here, certainly I'd probably do the rest on a close beneath that trough and that short-term uptrend ribbon. Until then, happy to go FRP. Happy is the wrong word. Prepared to go FRP and give it the benefit of the doubt, because there is still some good stuff going on here. Up to this point, we still have higher peaks and higher troughs. We do. We still have a short-term uptrend, and we still have a long-term uptrend. Okay, and both of those ribbons are doing their jobs. Okay, so let's not get too down on this, but I don't think we're adding risk at this stage. Let's go to BOT, which is one that looks substantially better. It was going very flat there actually for a while. And what did I have here? Look, there you go. This is a zero risk position. The analysis had pointed to that, and I absolutely stand behind that, because looking at that candle there, I would not want to have any risk on this one. Absolutely 100%. That's how I would feel after that. Okay, but we can't tell the future, so you can call that a flaw in the model, that it predicted it exactly wrong there, or you could call the flaw, well, that's more related to the fact the model can't tell the future. But what the model will do is give us signs that, well, unfortunately, that hasn't turned out to be the right decision, and maybe you need to think about getting back in. I think this is the first day I would get back in and out of third. Ironically, you had 3 down days after that. I don't think enough to push you out of that third, and then there's adding a third here. So I think you're full risk position for what you got. If you're following my model, I reckon you're plus 2/3 at this stage and happily holding. There's nothing in that candle that is sinister enough to push me out of the trade. So I'm going to go FRP for what you got. In brackets, I could put plus 2/3, but I don't think I need to. It's FRP. Not adding a third on that last candle because obviously the upper shadow is just keeping me out. We're nowhere near 50 cents, so I think there's nothing to worry about with round numbers. And I think you know enough to say, well, if we're starting to close beneath some of these levels, then we're having some problems, but we're nowhere near there, so I won't bother putting them in. Let's go to Brendan, who's got LYL. Oh, wow, what an interesting chart. Again, you can see how supply does manifest itself at old points of supply. You didn't have any warning here. I'm guessing that was earnings related, and we've had several earnings bombs, haven't we? Hopefully, and I'd love to know your feelings on this, and you can type it in if you want. I'd love to know your feelings on how you went during earnings season. I'm sure you had the odd bomb, but I'm hoping that you came out overall ahead and you had enough of the really, really cool ones, the really crackers where you go, oh yes, this is why I'm here. This justifies what I do. Like this is why I'm doing what I'm doing. You know, this has done exactly what I thought it was going to do. Hey, I know that's coincidence. I'm not going to get ahead of myself. It worked out by pure coincidence, right? Because you don't know the future and you didn't know the future when you got in. But I'm feeling good about myself. I'm hoping you had more of those moments then. Earnings season, as good as it looked before, you don't know the future, and that's what happened. I think that's what happened here. That's a real problem for me, that trade. I certainly would have to be, I'm thinking 2/3 out, and at most, doing that, I'm holding a third on the basis of the long-term trend ribbon, which is holding here. And I think that's where we are. Look, FRP, if you've got it, but I'm going to just put in brackets, look, at most, I think you're only justified having a third because we've got some major issues now up here. I mean, if we had major issues before, right, we've got even more major issues going forward. So you really want to be tentative. You've got to be tentative after you're attentive to the signs of supply coming in around that 1350 level. Okay, but happy to hold for now. Lower peaks, lower troughs, black candles would get you out of that final third. Frustrating. Brendan, I feel your pain. WDS. I'm going to assume you're short here because there could be no other way. And what would you be doing with your short trade? I think you've given up on the short trade here. I don't think there's any reason to be short at this point in time. I think you should be out of your shorts. If you got short when I started putting it in the list, well, I guess it would have been somewhere around May. Hopefully you did make a little bit of money on it before it started to rally, or at the worst case, I think you've broken even, but I can't see a reason to be short. There's no reason to be long because it's not an aggressive setup, and I've told you why at least twice already tonight. That's all the offline requests. Obviously, we had 2 weeks build up. Now I'm going to scoot through your online requests. In about 8 minutes, I'm going to tell you not to add any more to the list. Francine, can I have a look at Woolworths? Of course I can. I would have said on this day here, it looked darned amazing, as in not worried about any of the supply and all of these POSs we drew in the past. And then I wonder what that was, Francine. I'm guessing that was earnings as well, wasn't it? Francine's probably nodding. That was earnings, Carl. I'm guessing, because that's why you get a candle that looks so good to go the next one. Just missed. Didn't miss by much, but missed by enough, I think, to give us some concern. Not enough concern, I think, to not be running full risk position, but not far off it. That is not far off exiting. So underneath here, that's kind of the key point. But I think we now have to respect this one. So I would just move the goalpost a little bit and just sort of come clear of that low there and on a close beneath that. So close less than certainly a third. If it was a really bad candle, I'd go 2/3, and then I'd be sort of question mark looking to manage risk beneath here as well. And we should certainly be ZRP by the time we get there. Unfortunate, as I said, I'm pretty sure I shortlisted it on that candle there. It would have been a feature chart for very good reason, but we can't see what's coming next with earnings. Westpac, however, Francine, if you've got this one, that's more than made up for it because this one looks amazing, and this one is in tonight's shortlist. We'll go through those a little bit later on. That is what we call the stairway to heaven. And in terms of understanding when the market is just in unanimous consensus. And those two words are so important for you as an investor. Unanimous consensus, that is where you make the most money, and that is where it is easy, ladies and gentlemen. That's not slugging around like STP, right? That unanimous consensus, and it happens quite rarely actually, and it's happening in 4 banks at the same time here. We're very lucky. Now, I don't know what's going to happen next. I can't see the future, but this is unanimous consensus. And what is so rewarding about this particular one is in my day job for Market Index, I have the absolute pleasure, ladies and gentlemen, of interviewing analysts. And these analysts say, they say, look, can you give us a score between 1 to 5 of value if you see value in the market? They go, Carl, 1 being cheap and 5 being expensive. They Carl, 5. 5, Carl. Things are so expensive, particularly the banks. The banks are really expensive. They were expensive before they went up. NST. Let's go to that one. And Northern Star Resources, I think it's fine. It's been making the broader lists regularly, actually, over the last couple of weeks. So that means I'm pretty happy with it. I don't think there's anything too sinister in there. Happy to go FRP. If it's something, again, if it's close to your heart for whatever reason, not the way I operate, but I could if I love this stock, I know some of you still love particular stocks, and if this is the one you love, I could see a path to adding a third because I think it's very much intact. But FRP, no troubles there at this stage. They're your 3, Francine. Colin saying, hi, Carl, can we look at Droneshield? I've done that. Fantastic. I like it. It's plus 1/3 today. James, is it too soon to revisit Droneshield? Oh, awesome. This is giving me goosebumps because you're all seeing, if you're all seeing this, then I'm doing my job. So that's fantastic. And these were typed in before I talked about it. In the medical research pharma space, can you please take a look at HM1? Yes, I didn't shortlist it today because I don't often shortlist this. Is it medical research? I thought this is, it's like a fund manager. Is this not a fund manager? I don't often shortlist fund managers. So like it's a listed investment company. Am I not mistaken? No, I could be mistaken. And if that's the case, then I really should have shortlisted it because it's impeccable. So it's definitely worth a third. It's definitely worth being a feature chart. But I just figure that, well, this is going to live and die by the stocks it's holding. And I'm probably putting in a bunch of those stocks in my features anyway by default. So I tend not to double up on it. But if I've got that wrong, then, or if it gives you greater peace of mind, Andrew, then I think it's fantastic. Your second one there we have talked about, and CU6 is also fantastic. Today's candle doesn't warrant adding some risk, but as you know, this has been all over my feature charts for quite a period of time. Andrew, but you know what to look for also for it to not be worth maintaining your full risk position. Closing beneath there, black candles would be disturbing. Closing beneath the short-term uptrend ribbon would be disturbing. Sometimes they disturb you and they do that, but it's that time that they don't come back. That's what we're trying to guard against, and that's why we're exiting in thirds. So we still have some skin in the game if it does turn around. And the worst thing you can do, I think, is not have skin in the game. You've probably felt this many times, like that Droneshield parody I did, is once you're completely out of something, it's so much harder to get into it compared to if you actually held that third and just adding some back. You don't feel so bad. That's why I do it. Michael, have a look at EZZ, which is not in the list today. Certainly, it's been all over the feature charts, Michael. But it's not in the list today because of that upper shadow and because of the $3 level. So if you knocked out a third today in a shadow of $3, I've no issues with that at all, okay? FRP on what you've got, okay? But if you knocked out 1/3 today on the round number, no problems at all. That is, I actually prefer you do that. I think that's the right way to go. We're still plus 2/3, right? We're still willing this thing up, aren't we? That's the whole point of this model. Yes, we got out a third, but we're still willing it up. We don't want it to go down, okay? Not like normal people who sell something and then they're just praying it goes down so they don't feel like an idiot the next day. Let's go to, but we've got some skin out of the game. We've we've paid for a lot of this trade, and what a great trend, a great success story that is. Easy, I wouldn't have a bloody clue what these guys do. Droneshield, Michael asked me about Droneshield as well, and HLS. I'm so glad you asked me about this one, because it allows me to make this point that the system, it's not all about buying bottom left, top right. And I did short this up until maybe February, I think, or March. So I was doing them on Twitter. I didn't do short sell this at that time. But anyway, I think through these sessions, that... Okay, let me just say, what I would have thought about this all the way down, right? My point is that I love it now, okay? I think this is a great setup. I don't love the company. I don't give a shit about the company. But I give a shit about its chart. And it's done everything we've wanted it to do. So do we have... Okay, there we go. Have we got V-shaped rallies? Were they punctuated on volume? Oh, look, I've actually drawn this stuff in the past. V-shaped rallies on volume. V-shaped rallies on volume. Did they occur? Do we have a long basing pattern? Did the short-term trend ribbon change? Did it start offering dynamic demand? It did. It's a little bit of a blip here, but that's okay because we're dealing with this. It's not going to get through this the whole time. And then you get this. That's the kicker. For me, that's enough right there, plus 1/3. Did I put it in? I can't remember. I think I might have ran it that day in the broader list, and certainly on this day, I ran it as a feature chart, and it's in tonight again as a feature chart. Now, having said all of that, I don't have a clue where this thing's going next. It's just showing it is a feature chart. It could never go up again in the history of mankind from here. I don't know, and I don't care. Who cares? Who cares if it never goes up again the day after I bought it? Because I know how to get out of stuff. And that's why that's fine. This is it's a textbook turnaround play. Cannot get more textbook than this. There probably was an aggressive trade here, actually. Probably here. But that's ancient history. But what a great case study. They're good case studies when I've drawn a million arrows on the screen. Let's keep moving. Different Michael. Again, I promise you, two different Michaels. One after the other. LLC. Aha. Okay, the biggest dog. I shouldn't call it the worst dog on the ASX because there are other dogs out there that are worse, of course. But the other dog, perpetual dog, has turned around. And yes, I ran this, pretty sure I ran it here. And I think I ran it as a feature because it's a turnaround play. I like Healius better than this one. I think Healius would do better than this. But this is okay too. It's worth having some skin in the game. I think you're at a third at this stage, and just see how you go on that one because it's Lendlease, let's face it. All right. CHC, no problems here. It looks very similar to, I want to say, SUL we looked at earlier before, so refer to that analysis. It's fine. Not adding risk for obvious reasons. I don't think it warrants it just yet, but certainly happy to hold what we've got, and you know what to do. I don't need to explain it the 15th millionth time today how to get out of stuff. Dexus, it's kind of somewhere in between, your turnaround play, isn't it? But I don't think it's there yet. This does not look as good as the other ones. And remember, we're looking for a closeness of fit to this unanimous consensus. They're the two keywords I want you to take away today among the other 3 or 4 keywords I told you were the most important. But this is the most important of those most important keywords is unanimous consensus, because if you understand that and you get that right, your trading is going to be a breeze. Is that a picture of unanimous consensus, Michael? I know Michael's going, no, Carl, it's not. Not yet. Hoozle wants ANN. Unanimous consensus. What a great segue. It is in my list, in my short list today. You can see there, it's the first one that went in because it starts with the letter A. But yes, FRP and plus 1/3 for me. FRP plus 1/3. And think about how hard it would have been to buy this particular chart 12 months ago before you met me. You would have looked at that, you would have said, I can't buy that. Why would I buy that? It's gone up way too much. And now your brain has just no impediments to doing that now, and that is wonderful. Let us go to, because you understand unanimous consensus, let's go to MVB, which is also on the short list. So I'm just going to go ditto because you don't get any more unanimous consensus than that. But here, portfolio management heads up. If you already own, if you're FRP on ANZ, CBA, NAB, and Westpac, you might want to just think twice about adding a FRP on this particular one, okay? Hopefully I don't need to spell that out for you why that's the case. Let's go to EMR, which is not as good as some of the other ones we've seen, but not terrible at all. I still FRP. I know we've got a little bit of a lower peaks and lower troughs action going, but it's really compressed. It's really tight. I don't think any of those candles are so decisive. Look at today's candle bouncing off the short-term uptrend ribbon. So I'm fine with that. I'm FRP. Where would I change my mind? I don't actually want to see it close beneath today's low, because today's low is the trend ribbon. It is the manifestation of demand. We really shouldn't get beneath there. That's where I'd start to take some off the table. A third at least. I might consider 2/3, and I'd keep a third just to see, because this thing has a habit of looking bad before it starts to look good. I hate those ones. Let's go to Roscoe. Roscoe's got Brambles, which is also looking very strong. It didn't get on the list today. Roscoe's, you'll see when I flick back to the short list, it's not on the list. It's in the broader list, of course, but not on the short list, simply because today's candle doesn't warrant a plus 1/3. Yesterday's candle did. Today's candle doesn't. That's how it works, but it is still a picture of excess demand. It is unanimous consensus. Very happy to go FRP on that, but a right on there as well. It's been in the list many, many times. It's one of those. Roscoe, hopefully earnings season success stories for you. Droneshield back, says Roscoe. Another one on the Droneshield. Now you're all getting me concerned about Droneshield. Like we all get on it. It's going to go down. No, we can't think like that. That's not how it works. FFM is still fine, Roscoe. No complaints as well. A little bit like Emerald Minerals. Not the greatest of price action, but there's nothing so sinister in that price action for me to be concerned. It's still above the short-term uptrend ribbon, and there's a big pile of latent demand in the system here that it hasn't even interacted with. So definitely an FRP there. I am rushing, so I want to get through these. Don't put any more in. I should have mentioned that 6 minutes ago. So Mesoblast from Michael is the last one. Deep breath. Let's go US ones. We'll do those in a second. Thanks, Jeremy. Perry's got SGI. Okay, this doesn't ring a bell. There you go. Stealth by name, stealth by nature, and I'm guessing it hasn't come on my scans up to this point because it hasn't met the liquidity filter. Remember, that doesn't mean it's bad. It just means it hasn't met the liquidity filter. But yes, absolutely, FRP plus 1/3 on that last candle for me. No issues. It is a little bit sketchy. Clearly, you can see from the candles, we don't have that clean price action. It's not that liquid. Okay, so you can have some volatility just on that basis. So go into that eyes wide open. Tomorrow's candle could be equally black in the other way, just because there's not enough, liquidity volume sitting at those levels to prevent a small amount of capital doing some damage. But from what I can see, I think it's fine. Yep, I don't think I can add any more than that. Let's go to where am I? Remember I said I was going to highlight where I was so I don't lose my spot. Let's do that. Nigel, cheers, mate. Yes, I've been using your ribbons. They are very helpful. Much appreciated. No problems at all. Nigel, Nicholas saying, agree with Hoozle. Your daily watches are really helpful. They're about to become more helpful. Love the watch list. Thanks, says Francine. Thank you, Francine. GDG from Francine. Also, ditto on many others, which are unanimous consensus. Today's candle is not ideal. Is it too close to $3? I don't think it is. I don't think $3 is the issue here at all. So I'm not worried about that. It's a full risk position. I'm not adding a third, obviously, on the basis that last candle doesn't warrant it. Let's go to... sorry, these are for Robert. WGX. What happened to WGX today, Robert? I don't know what happened. It wasn't a dividend. We will have some dividends coming up. So as a public service announcement, they are a capital event. If they take out a previous point of demand, that's not an exit, okay? Because it's not just a demand supply event, it's a capital event. So you're going to have to, in your mind, because I haven't seen a charting package yet that does this, add back the dividend and use a bit of common sense. I think this might be paying a dividend later this week, so just watch that, because it could impact on this level here. If it closes beneath there before the dividend, then that's a problem. I can't imagine why it would, because it's so emphatic on this day and this day here and this day. But this thing, look at the volatility in the trends. We talked about unanimous consensus. This one doesn't quite have it. It's almost begrudgingly going up, and they're frustrating ones because they do sort of take your capital, and they do pretty well, but never shoot the lights out like you'd hope. I can hold this one. So I'm an FRP. but obviously concerned about today's very, very annoying candle. Gold tanked a bit today, and I'm not sure why. So, I still think it's fine. PNI, which I'm pretty sure is still very fine. In fact, today's candle is an emphatic showing of demand. It's coming in exactly where we think it should be at that short-term uptrend ribbon, so I'm still very happy with that one. Would I add a third on that last candle? I'm not far off it. If it closed on its high, it would have been a yes. It closed just off. So just let me see next high close on this one. So let's write that on there, because much like that was FRP. Let's go FRP. Next high close, plus 1/3 on this one. It is a very, very strong setup. Let's go to John started asking something, then maybe he got distracted. Nicola, can you look at Humm, which is still very good? That's in my shortlist today. You know how much I love big white candles and gaps on earnings. It's one of the things I've said to you right from the start, is that you want to buy those. It's not a case of, oh, that's gone up too much, can't buy that now. It's, you know what, the market has changed its thinking on this. How much did it change its thinking? It changed a hell of a lot. And you do tend to find 3-6 months later, they tend to be higher. And that's good enough for me. That's a plus FRP plus 1/3. That's in my shortlist today also. And we probably won't need to go through the shortlist because you guys are picking them all off. Let's go to JDO, which I think also looks very good. Yes, I had this in the shortlist, and I think it just didn't make the final cull. But now that I'm looking at it, I probably should put it in. But seeing as I've already done all the charts for tomorrow and the article, I'm not going to because I'm lazy. But yes, FRP plus 1/3, no question about it. Very high quality setup here. Happy with this one. And I think it might have been last week or the week before. It had to be the week before. It was somewhere in here. And somebody asked me that. I said, oh, look, it's just going sideways. And I drew this red thing, and I said, it's not doing much. It's not doing much. It's not doing much. I'm not interested. And then boom. And I don't think I shortlisted on that day, but I certainly shortlisted on that day. And if that closed on the high, I would have done on that day, ironically. Just to show how quickly things can change, RIM is shortlisted today. It's brilliant. Hopefully, a few people are on this. I've been putting this in the list for many, many weeks now. But FRP and even plus 1/3 today, because it's a picture of unanimous consensus. Let's go to SNL. I'm tiring everyone. FRP plus 1/3. I shouldn't need to explain this because this is one of the best charts on the ASX. It is a picture of unanimous consensus, and that's why, based on that last candle, is impressive. It is not only an FRP, but it's also a plus 1/3. John saying, hi Carl, are they both FRPs? They're more than FRPs, John, they're plus 1/3. CAT, an example of a pesky pullback, a lot of peaks and a lot of troughs, but not doing a whole lot of damage when it does. I think this is fine. I think yesterday's candle, Friday's candle is fine. Friday's candle is excellent. Today's candle is neither here nor there, but I think we're okay. So I could definitely go FRP here. Not too far, pretty orderly pullback into demand. Ideally, it didn't happen, but that's emphatic. So I'm okay. And what it does is it gives us a very clear-cut level here. Close beneath that, it's not a minus 1/3 sort of thing, if you get my drift. There's no reason to be still in it on a close beneath that. But otherwise, it's been a very good performer for us. Let's go to Adonis. You've been very patient, Adonis. Zero. I'm going to go ditto like many others. Still fine, still FRP, but not getting the third on that last candle because I just think, it's a little bit sort of hovering beneath this point of supply here. And next, I'm going to go FRP, and let me say, look, next high close. That's really all we're waiting for here, is plus 1/3. Let's go to GMG. I should have told you to stop putting stuff in earlier. Wonderful case study, because this one has certainly not gone the way of Red 5 or CTT yet. But it's not far off doing it, is it? It would only take a couple of decent black candles to actually really put this one on the back foot. And it's been such a darling for so long. When they can turn quite quickly. And literally, as recently as not this one here because of the damage that's done here. Understand that like I said, damage is X, and how much has it undone that damage yet? And I don't think, look, as good as this candle is, I don't think it warranted a third. I don't think I put it in on that day. I'm pretty sure I didn't for that reason. It's like these are the considerations in when we talk about the filters. A lot of the filters are up here that I don't think that one warrants going back in on that day. If it had done a little dink like this, then it's in. You know it would go in. So certainly up to here, it's all full risk position. It's all adding risk. And this is the push down that's important. And you can see it's taken out this. It's taken out this, right? It's damn near taken out these two as well. But certainly on this day here, it did. And look at this. Look at how emphatic that is. Let me get rid of some of these lines because we've got too many. But this is the killer here. This is it. I want you to really, really focus on that. Take a picture of it, stick it on your wall somewhere, because I feel that is the point of no return. That's the ZRP candle right there. And it might have only been on the open the next day that you actually we were able to fulfill that. So certainly I think a plus 1/3 earlier than that. And I think this would have been so I think you've gone sort of minus a third here, and then that's your minus 2/3. 2/3 there. And that's it. You haven't had to do anything since then. I think this is a zero risk position. This is a ZRP. Great case study. Let's go to, that's it for Adonis. Jackie's got Healius, which we've done. We like that one. Perry's got some US stocks. We'll do those in a second. Haraju's got LTP, which is magic. No complaints here. Actually, there is one complaint. Haraju, did you do it today? What should you have done today, Haraju? I want you to type it in for me, please. I'm going to do your second one in the meantime. This is magic. This is absolutely magic. The only reason why you haven't seen this in my shortlist is because I'm quite certain it hasn't met my liquidity filter, but it is an FRP and it's a plus 1/3. Just because it's not on the liquidity filter doesn't mean it's bad. It just means it's not on the it doesn't meet the liquidity filter. So very happy with that one. Not sure why that's not deleting, but it doesn't matter. Haraju hasn't responded to me yet. Haraju might have fallen asleep. No, but Haraju says bought at 43 cents. No, that's not what I'm looking for, Haraju. Let's go back to LTP. So your reply is he should have bought at 43 cents. Well, you should have. But no, I'm talking about what should you have done today. I agree. We all should have bought this one at 43 cents. But what should you have done today? Have another think about that one. Let's go to... I've lost my spot now. You have to tell me, minus 1/3, Nicola, Perry saying minus 1/3. But yes, but why? And it's not, the candle is not the problem. The candle's not great. The candle is manifesting supply because of this event, because of $2. Haraju, that's Haraju typing that in, $2. So look, this could go to $10 and we would find a way to add that third back. Okay, that's the important thing. If this thing goes to $10, we will find a way to add that third back. But as a precaution, we're going to just knock out a third here, and we've still got plus 2/3. Okay, we still want it to go up. We're still willing it to $10. But we do know that people do some stupid things. I'm going to say a different word there. They do stupid things like selling stuff en masse at a round number for no other reason it's a round number, and it could cause lower peaks and lower troughs. It could cause the end of this trend. It could. It probably won't, but that's why we only get out a third. TWR, I did that one. We plus 1/3 that one. Rupam's got some US ones. MSP is the biggest dog in the history of mankind. I've warned you about this one. Every now and then it kind of looks good enough to make the list, and I only ever begrudgingly put it in. If you see MSP in any of my lists, you have to understand it gave me no choice. Okay, it will get filtered out time and time again. Even when it looks half decent, it won't make the list because it's MSB. I'm not interested in that one under any circumstances. Thanks, Michael. I thank you, Carl. Only the best setups will do. I agree. Okay, we're at the bottom of the list. Don't type in anything else because I won't see it. We're heading back up the list to only do US stocks. How are we going for time? We're way over for time, but I guess we had to catch up 2 weeks today, didn't we? Let's go to actually offline requests first. CAVA, this one, Carver Group, is for San. San, brilliant. I'm happy with this one. Wonderful trends. Certainly full risk position. I don't know if I'm adding a third on that last candle, not because it's a bad candle. I just don't think there's enough of a resumption of upside momentum just yet. So certainly a happy holder, and I think just waiting for it. See that this bearish candle here, it sort of started here, but at least getting above the close of that. So I'll give you a level, let's say that's sort of 116.30ish. So maybe at 116.40, close 116.40 or better, then happy to add a third on that basis. I can write that on the screen so we remember next time. So certainly FRP, that's the first step, and then we'll go close greater than 116.4 for plus 1/3 on that one. And I'll click save on it for next time. But otherwise, it's exemplary, no complaints about it. And let's just have a quick look out the corner of our eye to see if there's anything we need to worry about. And there isn't. And look, last week's candle isn't so sinister that I'd be too concerned about it at this stage. On the weekly chart, let's go to Craig, who's asking about Amazon, AMZN. Let's do that, AMZN. And yeah, look, not bad. I don't think it, I can see where you're going. I think you're obviously looking for a turnaround play here, and Friday's candle is exceptional. Like, I mean, that candle is what brings it back on the radar for us now. But I still think it's got some work to do, and ideally it starts to treat that short-term trend ribbon as dynamic demand. We see some shadows pushing into that. We see just another dink. Give me one more dink. Give me short-term trend ribbon acting as dynamic demand, and then I could consider this for a turnaround play. I would also just put in your mind, look, how much damage has been done. And I think substantial damage has been done all the way to this massive gap here. And we're just very early in the process of doing enough work to undo that damage. So it's very tentative for me at this stage. I'm certainly not jumping at that one. Let's go to Rupam, who has CVNA, which is Carvana, which is a bit like our car sales, is it not? Which our car sales are doing very well. This one also doing very well. If I had it, I could certainly hold it. I'd be holding a full risk position. There's nothing in that price action yet that is concerning me. The last two of the last three candles aren't great. Obviously, Friday's candle's fine. And it's showing a bit of demand, dynamic demand coming in the short term uptrend ribbon. That's fine. No issues. I'm just obviously not adding to it. So, happy to go FRP at this stage, but waiting for a decent candle here. So, FRP, but next high close with I'd say decent sized candle would be plus 1/3 on that one. We'll click save there. And next one is Hood, which is the brokerage firm Robin Hood. And a little bit like Amazon, just questioning how much damage has been done and whether you think we've undone enough of that damage to warrant buying into this. So for obvious reasons, we would have been zero risk position sort of around here. I don't think you could have argue a case for particularly after that candle, having any risk on it. So you're kind of getting back to your exit in theory. And yeah, I think I could not contemplate this until an emphatic close above, say, 21.65. I'm not even going to write it on the screen because I think quite a bit needs to happen for us to get there. NVDA. Obviously NVIDIA. Last time we looked at it was here. We said plus 1/3. I stand by that. I think we'd undone enough of the damage to have a look at it, and that's really all it was. And I guess it shows one of the benefits of the model is we step into these things, don't we? We don't go rushing in all guns blazing. I think on the basis of Thursday's candles, we've got some real issues here, and Friday didn't do enough to undo the damage that was done on Thursday's candle. I think we've gone flat on this. I think we're zero risk position, and come what may, look, if it goes back up, it goes back up. But we're going to just take a moderate little loss on that 1/3. I think at this stage, I just can't justify having the capital on this, given that there's a high probability now that these two points of supply have actually been reinforced or are being reinforced in the market. Rupam, sorry for that. I wish I had better news for you on those three. Let's go up the list to trying not to miss any of the US ones because you've been very, very patient. Almost missed Perry's there. IBM, International Business Machines. You might have heard of them. That is a wonderful chart. We should obviously go back to our default zoom, and it's looking even more wonderful now. And we'll go back to our weekly chart to see if there's anything sort of sinister in the corner of our eye, and there isn't, and it looks even better on the weekly chart. So I've got absolutely no issues going FRP on this one, and based upon Friday's candle, definitely there it warrants a plus 1/3 also. This is a perfect chart. It looks to me like unanimous consensus, doesn't it? And if I can get the hang of trading view, I will be able to get that right. Let's go to GoDaddy, obviously the website domain provider and other website services. Just perfect, isn't it? Just perfect picture of demand side control. Let's have a look and see if there's anything out here we need to. It's just the funds just want to own this. They just want to own it, and they don't want to sell it. FRP plus 1/3. But we're just looking at this for the first time. The model has worked. The model has worked pretty much every day for the last 6 months, hasn't it? Or more, nine months. Save that one away. Let's go to, I was getting nervous I haven't saved these. And GIL, which is Gilead. No, I'm wrong. Gildan Activewear. Magic. Let's go here, make sure there's nothing there. That's okay. It's even better because it's taken out all of the major points of supply in its history, and therefore with just perfect candles, perfect price action, perfect trends, and unanimous consensus. We are compelled to do that. Thank you, Perry. As always, fantastic setups from you. Let's go up the list to Jeremy. Jeremy's got INFY, Infosys. Great chart. Just that little shadow on Friday, maybe holding us back a little bit, but look, probably not enough within the context of what I'm expecting. Is no issues here, no issues there, and great trends. Yeah, look, you do have to go, well, I've got some other ones that gave me the perfect candle on Friday. This one didn't quite give me the perfect candle. You know, if I've got a limited amount of capital, which one gets the dough? But no, look, I'm not going to let a pretty minor shadow. It is in the shadow of 2000, right? And that might actually be the cause of that shadow. But we're within that 5% mark. And I think, therefore, you have to say, well, it's not a big surprise at this stage, is it? So, what's that? We're within 2.5%. So I think we're dealing with that concept now, and that's probably what that shadow was about. FRP plus 1/3. Don't mind it. We're close enough not to have to worry about it. Click save, and we're going to go to Jeremy's next two. Only two more here. RTX. Excellent. FRP next high close plus 1/3. So that would have been that one. So hopefully at least 2/3, but I think you've definitely had reasons to get the full risk position in by now, Jeremy. Let's go to the weekly chart. I'm guessing there's nothing there because we've written the annotation on it previously, and that's why I like to do the annotation. It does, for me, also validate some of the stuff I do in my own brain. And you still need to see that after all these years. You still want it. You still want that validation. You crave it because markets change, stuff changes. Who's to say that my model is going to work tomorrow, right? Let's go NU as the last one here, and very good little dink, isn't it? Into 15, one of those pesky minor round numbers. It can cause a little bit of a reaction, but I wouldn't fuss about it too much. And I think that's all we've seen there, just a minor reaction to it. But otherwise looking very good, and clearly not an issue now based upon Friday's candle. So certainly this is an FRP, and it's also plus 1/3 because that is a very strong demand side showing there. So let's push that up here, click save on that one. And I'm pretty sure that was the last one from the US requests. And confirming that is, and confirming I've done all the offline ones. So that's it for tonight, ladies and gentlemen. We did get there in the end. I'm going to go back to here and read you the disclaimer one more time, which says that obviously everything we've discussed today is general advice. Act upon it if you will, but it's not my fault if something goes wrong when you do. Consider it whether it's appropriate for you or seek help as to determining its appropriateness. Ladies and gentlemen, it has been an absolute Pleasure chatting with you this evening. Hopefully you enjoyed it. I did. Obviously, I'll get the recording with all the timestamps done for you soon, and stay tuned on the watch this. I need to, Claire and I have got some screenshots and I need to go review those. Claire, I had a very busy week, but I'll sort that out this week, I promise. All the best for your trading and investing. Until we catch up again, bye-bye for now.